This is a lecture from Open Tuition. For the free lecture notes that go with this podcast, please visit opentuition.com.
Now we're going to look at organisational structure. If you remember, organisational structure was one of the determinants or influences on corporate culture. Once we get away from the power culture, that's really the boss figure who's all powerful, most organisations will evolve into a simple functional structure. And it's called a functional structure because the different functions like finance, manufacturing, research and development, manufacturing have got really different departments. Terribly common type of organisation, and here's an organisational chart depicting it. And of course, what you have below the finance director, the manufacturing director, and so on, there will be other hierarchies in there, which, let me just get, where you maybe got kind of managers, supervisors, and people in charge of the receivables ledger, and so on. Functional structures work very well for a while. What you can have is great economies of scale. All your finance, all your invoicing and so on goes through one department. All your sales and marketing goes through one department and so on. You get great efficiencies from that. The people within the organizations tend to work quite well together. They have similar backgrounds and interests. And for a long time it works very well. Where it often begins to break down a little bit is when the organization gets much larger. So let's say we had a very large manufacturing company, and we'll say that the manufacturing manager is maybe in charge of, let's say, 2,000 people. Now, if you are in charge of manufacturing director, in charge of 2,000 people, then you are a very powerful figure. You're really a real prince in this kingdom, really. And you begin to see that what your purpose is to look after manufacturing. And you get what's kind of called, it's sometimes called a kind of silo mentality. The manufacturing director or managers will make sure that their performance in their department is very good. They feel powerful enough to rule almost absolutely within this. They resent anybody interfering. And see what's going to happen. Maybe people in R&D, quite a large R&D department, but kind of pursuing their own interests and so on, maybe not liaising very much with what people in sales want. And you could envisage a kind of a situation where maybe the people in sales, they get a special order or the first order from what could be a very important export customer, but the customer wants the orders seen to very, very quickly. And so the people in sales go along and they talk to the manufacturing director and they say, could you interrupt your current production to make this special batch for this potential new client, because we think it's really important. If we perform well here, we're going to get more jobs. And the manufacturing director is kind of looking after manufacturing, doesn't want any inefficiencies at interrupting current manufacturing processes, and feels powerful enough to say no. And of course, the manufacturer is looking after manufacturing, but is really not seeing the bigger picture, that your purpose really is to look after and make sure that the whole organization does well. A second really result of becoming very large is that ultimately there's a degree of, I suppose, diversification within businesses, because we know businesses, they may be selling to Europe, they may be selling to Asia, they may be selling to North America, and the products needed in those three markets might be slightly different, the competition will be different, the rules and regulations will be slightly different. And it maybe doesn't make much sense to cram three different markets essentially together into one sales department and one manufacturing department. And what will often happen as the next phase to get over this kind of diversification is that a divisional structure is set up. So you split the business into 2 or 3 or 4, each like a little mini business within the overall group. They could in fact be subsidiaries. The normal basis on which to split up your divisions, well, you can have geography. So people talk about the North American division, the European division, the Asian division. And what it means is really specialization. You will serve these 3 markets better if you manufacture goods that they specifically want and need, which comply with their local laws. You will deal with them better if you know what your competition is like there and you price your products. You know how to advertise better, what sort of adverts work in each market, and so on. The financing rules and regulations may be different as well in the different markets. So you're going to get maybe certain inefficiencies coming in because there might be a little bit of duplication, for example, in finance. But the predominant view really is that divisionalization helps. And then you can also compare one division against the other and kind of set targets and hope that they beat each other. A second divisional structure can be set up really by product. So we used to have a very large chemical company in the UK, now taken over, but it had 2 main products. It manufactured paint and it manufactured agricultural chemicals. Now, there's really nothing in common between those. The manufacturing processes were different, the suppliers were different, the markets into which you were selling were very, very different. It made no sense at all to keep them together, and they had a paint division and agricultural chemicals division, again, to kind of specialize. And finally, what they can specialize in, or divisionalize over, is customers. So some companies divide their operations into a division which deals with consumers, business to consumers, people like you and I, because we will be buying small amounts of product and so on. We tend to be paying cash. We'll respond to certain adverts. And another division which sells to other businesses, business to business division, because they will often be selling much greater volumes to these people. The sorts of product they require might need to be slightly different, maybe more resilient, because in a business environment, maybe it's going to have more wear and tear. And there the selling will be done in a different way. You'll be giving 30 days credit. You'll be advertising in trade magazines rather than in the separate newspaper. So divisional structures is the way many businesses evolve. But to some extent, this hasn't maybe got over the kind of silo mentality that people might have in saying, I'm a manufacturer, I will just look after manufacturing. And the next structure is one which begins to address this. This is a matrix structure. And for a long time, matrix structures were kind of frowned upon, certainly by classical management theory. Classical management theory said that any one person should only have one boss to report to. One person shouting at you was quite enough. That it was wrong and unfair to have 2 bosses, to be answerable to 2 people. And a matrix structure does away with that classical rule, which was called unity of command, and recognizes that maybe you do have 2 bosses. And here we have, for example, we have a person here who, technically speaking, is a quality control person and is going to be reporting to the quality control manager and responsible to the quality control manager to make sure all the tests are carried out, but has been assigned maybe for a couple of years to Project B. Let's say the projects are civil engineering, they're building bridges, something of that sort. So this person's now responsible to the manager of Project B. And you could envisage a situation where Project B is falling behind time, and so the Project B manager puts a bit of pressure on this quality control person, saying, we could speed up the process if you were to cut out some of the tests, and then we could get the bridge finished by the deadline. And the quality control manager and saying to this person, no, you mustn't cut out any of the tests. We want everything signed off and so on, because if something happens, then we're going to be in trouble. So we've got these two pressures put on this person, this individual, and that's regarded as being a bit unfair. Now, I don't think the matrix management causes this dual pressure. When I was an auditor, or training to be an auditor, I was definitely reporting to the audit partner. But when we were out on audit, we also had to do some work for the tax partner. We'll be going through the repairs and maintenance to make sure it was really expense and not capital and so on. And I was put under pressure to do more work for the tax partner and to do more work for the audit partner. It wasn't formally recognised in the matrix. I was really part of the audit department, but it didn't stop the tax partner putting pressure on me. And I think what the matrix structure does is actually more honest. It recognises that it's rather idealistic to say you're only reporting to one person, only have responsibility in one direction. This kind of brings it out into the open. What it might empower this poor person here to do is to say, look guys, of the three of us, the manager there and me, I am the most junior. You have got kind of conflicting demands here. You want it done quickly. You want it done properly. What do you want me to do? Do you want me to listen to the person who shouts loudest? Or do you want me to listen to the person who is the most fearsome in some way and do that? Is that the right way for me to make the decision as to what I should be doing? Would it not be better for you two managers, you're the ones with all the experience, all the skills, why don't you communicate? Why don't you talk together? Why don't you decide whether or not maybe some of the quality control tests could be cut down a little bit, or maybe postponed until maybe after the bridge is opened, something of that sort? Because what we want out of this is a win-win. There is no point in our kind of silo mentality of the project B manager getting the bridge done on time if it's unsafe. And there's no point on the quality control department manager sticking to the rule of the law, so to speak, when that wasn't necessary. What we want is the bridge safely constructed and delivered on time, a win-win situation. And then when you've decided what you want me to do, tell me. So the great advantages of this is getting out of the silo mentality, seeing that we're all in it together, really. Communications must be very good. The disadvantage is perhaps we're still left with wondering, well, who is my boss? Who am I really being responsible to for this couple of years when I'm assigned to this project team? And that uncertainty perhaps still lingers. But it's a very useful structure, particularly when you have a project-based kind of company where you have people from many different disciplines forming the project team. The overall structures which we have can be, getting away from matrix structure, getting back to some sort of functional structure. The two extremes, I said earlier, was tall, narrow and wide, flat. The tall, narrow structure is the more old-fashioned one. Lots and lots of layers in it, and lots of grades and so on within that. And lots of supervision. All these middle managers were kind of supervising each other. Here we have what's called a span of control of 2. This supervisor only looks at 2 people's works. And if you have a span of control of 2, that really gives you half a week to supervise each person or to interfere with their work. And a couple of things happen to make this tall, narrow structure less popular. And it really began in the 1990s to begin to change. First of all, in the 1990s, very good products began coming in from cheaper production areas. And traditional Western, tall, narrow organizations found that they had to save costs. One of the ways in which they could save costs is they began to say, well, what are these managers here actually accomplishing? They're just managers checking on supervisors checking on less important supervisors. Is there any actual added value happening in there? So there was an idea maybe we could get rid of them. Second reason they got rid of, or this became inappropriate, was it was very, very inflexible. People were proud and jealous of their grades and so on. And they saw the grade, the role, almost the job title as almost being more important than the job. They would cling on to the perks. I was once in an audit client. It had 27 major grades. And I was working, I think, once in their internal audit department. And in the morning, the internal auditor got a letter through saying he was promoted. And the first thing he did was go off to the staff manual to see what the next grade up was entitled to. And this person discovered that he was now entitled to a chair with arms and was entitled to a better ashtray, because everybody smoked in offices in those days, a nice glass ashtray. Was entitled to a better waste paper basket, because obviously now he was more senior, the standard of rubbish was higher, needed a better waste paper basket. He was entitled to a little square of carpet under his desk, and was also entitled to an extra 3 square meters of office space. This was all set out in the staff manual. This is kind of symptomatic of an extreme bureaucratic, bureaucratic role culture. And before the day was out, all of those changes had been made. He got his new chair, his new ashtray, his new waste paper basket, his square of carpet, and the company carpenters had come and moved the wall of the office out a little bit to give 3 square meters more. And this was important. This was a symbol and title, if you like. You wanted to show off that now I'm a higher grade, and this is how you proclaim this to people. And this means, of course, that then people hang on to that, very jealous of it, not very flexible. And the final problem is that the distance between the top and bottom of the organisation is quite large. When nothing changed very much, it didn't matter, because the person at the top, who's maybe been there or been in the organisation, not at the top, but had been in the organisation maybe 30 years, is a real expert in the organisation, because it hasn't changed. The products haven't changed radically. The marketing hasn't changed radically. Now what happens is it might be the new recruit at the bottom who has got valuable technical knowledge, valuable marketing knowledge. It's the recruit at the bottom who is more aware of the importance of, say, social marketing, like Facebook and Twitter and so on. The person at the top would probably have heard of these, but may never have used them. And what we need is better communication. And if you go through this method here, going up through the managers in this very strict way, because every time you tell something to a manager, it's going to be changed slightly, either deliberately or just accidentally in the retelling. It will take weeks to get up to the top in a garbled form, and then it will probably take weeks to come down again. And you get a reaction to a completely different idea. So during the 1990s and 2000s, many companies had a deliberate strategy of either flattening or delayering the organisation to turn it into wide flat. And what we have here are far fewer layers, but a much greater span of control here. Here I think has been drawn with a span of control 10. This means that the manager has to be somewhat of a better manager, and maybe the people have to be better people. If you're looking after 10 people now, you can't supervise them nearly as closely as only looking after 2. You have to tell them in a better way what to do, delegate better. They have to be maybe more qualified to work well with that supervision. It's more egalitarian, less distance between top and bottom, and of course it's going to help the communication, maybe only 3 or 4 layers to go up. You won't be frightened to speak to the manager who's kind of 20 layers above you up here. These people are much more accessible. So, movement to the wide flat is what has by and large happened in many organizations. The shape of the organization says nothing about the power in it. So the shape of the organization doesn't tell you whether maybe the person here has got expenditure of authority of 100 or maybe expenditure of authority of 10,000. This is really dealing with centralisation, so it is. Centralisation is a passage of power and decision-making ability down through the organisation. And generally speaking, the answer is that some decentralisation is good, but too much is likely to be bad. The good things arising from decentralisation are these. If there is no decentralisation at all, it implies that top managers are making all decisions. This means that their desk is full of stuff, and you've got really important decisions there, like should we open in Europe, mixed up with relatively less important decisions like what sort of coffee machine should we have. And the time is just cluttered. What you want to do is to leave top managers time to make the top strategic decisions. Get rid of the other stuff further down the organisation. Secondly, it's liable to make better decisions. Faster, you don't have to refer up, you can make them locally. Functional and geographical experts. There is no point in me, if I was a CEO, being asked to make a decision about marketing a product in Italy. I come from an accounting background, I know little about marketing, other than what's in P3, and I know nothing about how to advertise in Italy. So the best person to make decisions about how to market and advertise in Italy is a marketing expert, perhaps based in Italy. It motivates staff. Good staff want to be able to make decisions. If you don't delegate and allow people to make decisions, they get bored, they will leave. We all get a great motivation from making decisions, running our own little show, if you like, seeing whether or not we are successful. And finally, training and assessment of staff. How do you know whom to promote if you never give them a chance to run a little bit of an organisation? And of course, the normal route through an organisation, you put in charge of a little part of it, you do that well for a couple of years, you promote it to a larger part, and so on. You keep being promoted until you prove yourself incapable. On the other side, decentralisation, there can be some duplication of efforts, but by far the biggest danger is this lack of goal congruence or dysfunctional decision making, where one manager or one division maybe makes a decision which is going to be hurtful to the group as a whole. The worst case I ever came across of this was a company which had developed quite quickly by acquisition, and many of the acquisitions were foreign. And really the only people who knew the name of all the companies in the group were at head office. It wasn't really that important most of the time for each subsidiary to know the name of all the other subsidiaries. And what happened was a government contract came up, and 2 subsidiaries independently and unknown to each other began bidding for the same contract. And of course they were just bidding against each other, bringing down the price. So you still need a bit of coordination. You can't let all your divisions go entirely their own way. Coordination has to be there to try to avoid dysfunctional decision making. Now this diagram, Mintzberg's organisational forms, is of some importance in the exam, has been explicitly talked about. And we need to just see what it's trying to say. I'm not a great fan of it. It doesn't particularly tell us how organisations should move. It rather more tells us maybe the shape of organisations, or how the shape is now, so to speak. Anyway, what we have, the way to remember it is the following. Strategic apex. Strategic apex, think of apex as top, think of strategy. This is basically, to all intents and purposes, the board. You have the middle line, think of this as the middle managers. This is the way instructions get passed down. The operating core is basically the workforce. Support staff, I think we know what support staff are. It could be people in IT, it could be people in the accounting department, maybe people in HR, maybe people just word processing for you. That's support staff. The bit of the mystery in it is what's meant by the technostructure. And just as in support there isn't just one department, there isn't certainly a technostructure department, but these are the people in the organisation who are responsible for really kind of procedures and manuals. Rules. So in organisations you have finance manuals. You've got the financial control system is there. You will have the health and safety manual. You will have the quality control manual. You have the employee manual to tell people what their pension entitlements are and how disciplinary processes work and so on. So this is the people kind of lay down the law and the rules and the regulations within the organisation. And what Mintzberg was essentially saying is that the size and influence of these organisational components of the organisational form change. What we have effectively got in here is what Mintzberg would have called a machine bureaucracy. A machine bureaucracy. And by a machine bureaucracy, he meant really mass production, something like a car manufacturing company. And in a car manufacturing company, big company, you tend to have quite a long middle line here, quite a lot of middle managers, even if we've moved to the white flat kind of structure. And you've got a very wide, very large, influential technostructure over here. Because in a factory with 5,000 people, you need to be very strict on health and safety regulations. You need to be very definite on your employee manual so that everyone's treated equally and fairly and know what their rights are. You need really strict kind of quality control manuals because in mass production you have to make sure that you can produce the goods to a certain quality and so on. And there'd be specifications how to make things, diagrams and so on. So very, very tightly controlled, so the technostructure is really very influential. A second structure that we can just kind of contrast this with is not a machine bureaucracy, but what he called a professional bureaucracy. And what he meant by a professional bureaucracy was a profession like a firm of accountants or a firm of lawyers, that sort of profession. And what he said there is that the importance, the kind of size of these components change. And the way they change is, first of all, the middle line is going to be much shorter. So we're going to be drawing this again. If I can find, let me just find somewhere to draw it here. You'd have your workforce at the bottom. This would be your lawyers or your auditors going out to the client. You have a very kind of short middle line. This would be the partners at the top. You've got quite a lot of support still. IT, accounting is still needed. But as well as this being quite short, the technostructure is very, very small. So why those two changes? Why has the middle line been shortened? And the middle line has been shortened because in a professional bureaucracy, the people who go out and do the audit or deal with the legal case, each legal case is kind of unique. Each audit is unique. And when you come back to the office with your audit file and it's reviewed by the partner, and then you go to essentially get the audit signed off, it is these people here, the partner wants to talk to the people who were directly involved in the audit, because they are the ones who know best the unique problems that the audit had. And you can't do that if there's 10 people between you and the partner. So most firms of accountants, the kind of number of layers that you might have there is probably about 5, really quite short, from person at the bottom to partner. What about the technostructure? That's maybe surprising that it has become small, because we know that auditors have got internal control questionnaires, they've got the procedures and how to carry out audits and so on. But again, although you have forms to fill in, the way you fill in those forms is completely unique for every different audit client. There isn't the idea of mass production in a firm of accountants or a firm of auditors. Each client has unique problems that have to be dealt with. So although the technostructure may still be there for personnel, human resources, employee manual and so on, although the technostructure may provide forms for you to fill in during the audit, only the operating core can actually fill those forms in a unique way which is tailored to that job. So the technostructure is therefore much less influential in the professional bureaucracy. So what Mintzberg was saying is that the size and importance of these components is changing as you change the nature of the organisation. As I say, not a great fan of it. I don't think any organisation ever thinks to itself, I must shrink the technostructure. But he was kind of describing maybe the way we find organisations. Finally, about 3 kind of little definitions to be looking at here. You need to know about boundaryless organisations and more modern forms of organisations here. Virtual, hollow and modular. So a virtual organisation is where you almost form a virtual division just to deal with a temporary opportunity. It's formed, you maybe second people to it for a little while and they come back after the opportunity has been dealt with. A hollow organisation is where you try to subcontract all non-essential, non-core competence activities and leave for yourself what you're really good at. So for example, maybe Apple's a little bit like this. Apple, very good at design and new products and services and so on. It could outsource manufacturing, it'll outsource delivery, it could outsource human resources, it could outsource its accounting if it wanted to. So you end up and your function really in the middle is to organize all of these subcontractors to produce the goods. You retain what you're good at, subcontract to other people what they are very good at. And finally there's the modular, where you may order parts from internal and external providers and assemble a product there. Not to my mind much different maybe to what ordinary organizations do. This is a diagram of a hollow organization. Here we have the core company where we keep core management, key employees with the real skills. We buy in IT services, buy in accounting services, buy in legal services, buy in marketing services as we need to. We have suppliers, not only supplying parts, but maybe manufacturing the finished goods. We get orders in from customers. The goods don't have to go through us at all. The goods can go directly from suppliers to customers without going close to us. If you look at their financial statements, you'll see quite a lot of revenue, but probably relatively low non-current assets, because everything is done by other people rather than being brought in-house. And this is a relatively popular way for organisations to be moving towards at the moment.